Well, hello, everyone, and thank you so much for joining us today. It is great to see everyone. My name is Benjamin Z. Miller, and I am the Managing Director of a United Kingdom company called Alamo Mortgage Holdings. And in this webinar, we are going to show the opportunity for you where, as an investor, by purchasing our corporate income notes and bonds, you can earn returns that are hundreds of basis points over what you might be able to earn on other UK gilts or other government bonds. Before I get started, I am going to go through a very brief legal disclaimer, and then we're going to go through this very quickly where you can see exactly how it works. So as accredited investors, you will be aware that all investments carry some level of risk. This investment is only available to investors who are able to assess their own appetite for risk. Please read the risk statement within the investment memorandum before investing. All right, well, fantastic. So let's go through the financial product. We pay 8%, and we do this by actually offering a corporate income bond, a note, where you can earn this 8%. The term ranges from 3 to 50 years. So if you place, for example, 100,000 pounds, we can pay you for 3 to 50 years, 8%. You can just select what you want. If you want to lock in a high interest rate for a long term, you can lock it in for a longer term. Once a year, we adjust the interest rate for whatever the current market rates are. The product is able to pay those high returns because we buy mortgage debt in America. We buy packages of mortgages, we negotiate hard, and we get them at a great price. We buy them far below the face value. And as a result of that, we are able to earn a lot of money. And then we can easily pay 8% to our bondholders. The team that we have in place has over 200 years of experience. I'm going to real briefly show you the team, point out a few team members, and then we'll go through how everything works. So our team, as I mentioned, has 200 years of experience. We've got team members that have been in all variety of business, investment funds, real estate projects worldwide, and our team has overseen up to $1 billion in financial assets. Members of our team have also worked with clients including Microsoft, Chevron, Exxon, Eventbrite, and Fora Financial. As for myself, I'm a businessman. I'm an American citizen. Prior to founding Alamo Mortgage Holdings, I was involved in the real estate and mortgage note investing industry in the United States. I also have done some business acquisitions and private equity deals, and I'm also the manager of an emerging market bond fund. Our other team member, Marina Zaharelska, she is our international investment coordinator. She graduated from EU Business School with a Bachelor of Arts in International Relations. She speaks 5 languages, so if you have a particular language you want to speak, there's a very good probability she can communicate with you. We have Scott Wynn, who is an industry expert for Alamo Mortgage Holdings. He brings 30 years in the business, and he's a specialist in what are called junk assets, where taking an asset that is not producing income, maybe a mortgage note where the borrower has stopped making payments, he can work things out where they start to make payments again through a loan modification or a variety of other methods. We have Fred Hobbs. He's the director of mortgage servicing. Fred, he has been a licensed mortgage originator in the state of Texas since the year 2000. He's also the founder and president of Texas Mortgage Capital. So he brings a wealth of experience. He's completed thousands of loan originations, private money mortgage notes, and he has a company called Secure Net Loan Servicing. And they also do all of the servicing for the mortgage notes with Alamo Mortgage Holdings. He's currently servicing approximately 2,000 mortgage notes. So that is something that is really great, and highly recommend Secure Net Loan Servicing if you need servicing for mortgage notes. They are great. David Jones is our in-house counsel. He's a licensed attorney in the state of Texas. He looks over all of the legal paperwork when we are purchasing packages of mortgage notes and makes sure everything is in proper order. We have Anna Kulikova. She's a specialist with investor relations. She loves to work with investors to help them to get to their passive income goals. We have Mark DeRuyter, who's our Chief Technical Officer. He has a strong background in the mortgage finance software industry. He has actually been involved in writing a lot of large mortgage software that's used commercially throughout the world. There's a possibility if you've ever used some software for mortgage calculation, you might very well be using something that he was involved in the creation of. And he brings a wealth of experience to the team. We have Andrew Richings, who's a UK citizen. He's a consultant with Alamo Mortgage Holdings. He's the founder of a company in the UK called Thomas Kelly Holdings, which is a boutique private consultancy firm. And he works with a lot of ultra high net worth and high net worth investors. And he has a great deal of experience with fixed income bonds. So he brings a lot of experience to the team, and he helps us with staying in compliance with the different regulations that we're subject to in the United Kingdom. Now let's go through the actual product. The product pays 8%, and we do this. We're able to pay this high rate of return by purchasing packages of mortgage notes at a steep discount. So you can choose the term that you want. The shortest term that we offer is 3 years, 5 years, or 50 years. Now, folks, if you're a UK investor, I want to clearly show you something that you may or may not be aware of, because there is a big difference if you're getting 8% in the UK versus 8% in the United States, particularly if you talk about an investment that is a long-term investment, such as a mortgage note that may last 20 years, 30 years, or even longer. So if you go back to the Bretton Woods Agreement at the end of World War II, 1 British pound would buy 4 American dollars. Now, if you fast forward decades to the 1st of January 2023, 1 British pound is almost at parity with 1 US dollar. So that is a huge loss in value of the British pound compared to the US dollar. You know, there's a saying in currency trading that you shouldn't fight the trend. And it's pretty clear here that the trend is for the British pound to lose value against the US dollar. So if you have a portfolio that is primarily denominated in British pounds, you may want to think about Alamo Mortgage Holdings bonds, because we can get you a conversion, a listed conversion, where you can convert out of British pounds to US dollars on the bonds you purchase with us. We don't make any money on it. We use the listed exchange rate. We're not trying to play around and make a little fee on doing the exchange rate conversion for you. But you can come in, and if you would prefer to be paid in dollars, if you'd prefer to convert your pounds to dollars, we can do that for you. Or if you're of the opinion that the British pound is going to come roaring back, we are very happy to also sell you the bond denominated in pounds. Okay, let's talk about how we can pay the 8%, because this is a question that we sometimes get. Well, basically, we're able to pay the 8% because we buy the mortgages at a discount and we obtain a yield that is far higher than 8%. We are targeting a yield of around 14%. In reality, we want to get even higher than 14%. But take an example of a mortgage that has an unpaid balance of $100,000. Let's say the interest rate is 10%. We might purchase that mortgage for $70,000. Well, if we purchase that mortgage for $70,000, the yield is now 14.2%. So it's quite easy to pay out 8%, and that's how we're able to do it. What determines the value of a mortgage note? This is so important, folks, because if you're buying mortgage notes, you need to understand what really drives the value. And one thing that hurts beginners, and one thing that also hurts people that say, I don't need these guys, I'll just go buy my own mortgage notes. Well, folks, I caution you against that. If you haven't had proper training in purchasing mortgage notes, you can do a lot of damage if you make mistakes in buying notes and you don't know how to price them. But basically, mortgage notes are determined by the buyer, who is the guarantor of that note, how good is their credit, how much did they put down, that's another thing. What about the collateral? How much is the asset worth? Let's say the asset's worth $100,000, that's the market value, but say that somebody made a mistake and they paid way too much for it. Maybe they have a note for $200,000. Well, the fact that that guy signed a note for $200,000 doesn't make the note worth anywhere close to $200,000 if the collateral's only $100,000. So the collateral is real important. The down payment of the buyer, did they put a small down payment or did they put down a big down payment? We like to see big down payments. They've got more to lose if they walk away from their financial obligation. What about the terms? How's the interest rate? You know, in general, a note that pays 10% is a lot better to buy than one that pays 5%. How about the history? How is the history of payments? Is the buyer making payments? Have they made payments on time for 5 years? Have they been running late on the payments? Are they paying 30 days late, 60 days late, 90 days late? Have they stopped making payments and it's been a year or two since they made a payment? All these things are important. So the pay history is just really critical in terms of the notes. And this is something that's important. Also, the paperwork. Was the transaction closed properly at a title company with lender's title policy? Did a lawyer that knows what they're doing, a licensed attorney, do the paperwork, or was it just two guys at a kitchen table that worked out a deal and wrote it up on a legal Zoom document? So it's just real important that that everything is done properly. So, okay, what about an example transaction? So let's look at this. This is an example. It is a real property and a real price, but it's not an asset in our portfolio. I just show it for an example. So sales price was $120,000. The buyer came in and agreed with the seller to make payments over time. They put down $20,000 and the debt is $100,000. Let's say they agreed on an interest rate of 10% for 30 years. So the buyer's going to make payments for 30 years at a 10% rate of interest. The mortgage payment's $877 a month. Let's say they've made payments for 60 months, no problems, everything's going beautifully. So that leaves an unpaid balance, since most of the payment is going to interest. It's not amortizing very much principal in that, of $96,574. So let's imagine that that note was presented to a buyer. The buyer might say, well, you know, if the seller would sell it for $83,322, they'll buy it. That creates a 12% yield. So now that is something that's important. We're actually looking for about a 14% yield as our minimum, but just to show how that yield calculation. So we'd be wanting to buy it for less than $83,000. But that's how it works. And that is exactly what happens on these transactions. So let's take a look at a package of mortgage notes, because we are more focused on buying packages of mortgage notes instead of an individual note. And that works out far better for you as a bondholder, because that way you don't have the risk of you're going to buy one note and you don't know what's going to happen with it. So here is a real package of notes where you can see what they might look like.
Well, this right here is actually an example of what a portfolio of loan notes might look like. So this is actually a real portfolio, and you look here and you can see the name of the borrower, the number of months. You can see the interest rate. This debt is actually pretty high. 14.75% is what they're paying on that mortgage. The monthly payment is $278.50. Then you can see the terms, the status, this sort of thing. So, I mean, you've got a list here, and this is an example of a package where a package of these mortgages can be purchased. This type of deal would be done by a larger investor. It would not typically be a single investor that would buy this package. For example, my company, Alamo Mortgage Holdings, this is the type of package that we might actually purchase, something like this. But if you're just starting out in investing, you might start out by, you're just going to buy one mortgage note. So for example, you might come in and this mortgage note, if you find something like this out on the market, you might try to negotiate down from, you know, the unpaid balance of $89,570. Maybe you try to buy it for $59,000 or $69,000. But that would be one note. But you can also purchase packages of notes. And that's something that Alamo Mortgage Holdings is involved with. It's a company that's a United Kingdom company that actually purchases packages of mortgage notes. So wanted to give you an idea of what a package of notes look like.
Fantastic. So that's basically our business. Now, from time to time, I am asked by people, why would I buy bonds? You know, what isn't there inflation? Bonds, why would I buy bonds when there is inflation? Well, folks, that is a great question. And I am going to not answer it as Benjamin Z. Miller. I'm not going to give you my opinion. I'm going to talk about a Nobel Prize winning economist, Harry Markowitz. He actually won the 1990 Nobel Prize for his contributions to what is now known as modern portfolio theory. And if any of you have accounts at BlackRock or Merrill Lynch or Charles Schwab or all of these different brokerages that are out there, they just love this modern portfolio theory. It is so wonderful for them because they can use all these complicated mathematical models, and they can spend all this time doing it. But you know, the guy that created this, when it came to his own portfolio, he didn't even use that. What he in fact did was he had a very simple system where he would put 50% of his money in stocks and 50% of his money in bonds. Now, I'm not saying you should do that. I'm just telling you what the guy that created modern portfolio theory that all of these experts and geniuses around the world are using. He didn't do it that way with his own portfolio. He kept it simple. He'd put 50% in bonds, he'd put 50% in stocks. And then once a year, he'd make an adjustment. So he'd go in once a year, and if the stocks had gone up in value, he would sell some stocks and he would buy bonds. Or if the bonds had if the stocks had gone down in value, he would sell some bonds and he would buy stocks. He wasn't trying to catch a falling knife. He wasn't trying to predict what the market would do. He would just adjust. And folks, I submit to you that you may want to think about what percentage of your portfolio is in bonds. I have seen so many people get their hand burned on that cryptocurrency stove, and they cannot seem to understand that it's not going to pay them any income. And for everyone that runs around talking about how smart they were, that they guessed right, there's a lot of others that have suffered. So I just suppose that a good strategy for some investors might be to look at what this 1990 Nobel Prize winning economist did. And I just encourage you to think about that. Okay, so why would we do Texas? Wait a minute, the United States is a big country. Why in the world just Texas? Why aren't we buying mortgage notes in California and New York? Well, folks, we want to buy in the best state. And the reason that this is the best state for buying mortgage notes is because a lot of people from New York, people from California, they have had it with those states. They are selling their real estate because they don't want to live with all of the regulations. You know, you look at all the regulations, the people in the government there, they just love to make laws. And this has the effect of making it hard to do business. And it's also something where if you are loaning money on real estate, you're going to have a hard time enforcing your rights in those states. Whereas in Texas isn't that way. The banker has a lot more rights in Texas if he's not paid compared to in California or New York. So the effect of all of these people moving to Texas is it drives up the value of the real estate. And they love it when they get to Texas because our real estate is so cheap. They go in, they came out of California and it cost them $1 million for a house. They go to Texas, it can cost them 100 or 200,000, and they are amazed. And they pay top dollar. They don't even really negotiate. They think that our prices are just so inexpensive. So that has the effect of increasing demand for Texas real estate. And as more and more companies move, it is good news for Alamo Mortgage Holdings. So that is why we're in Texas. It's the best state for what we are doing. And we focus on just that one state. We're not going around buying a lot of mortgages in other states. So that is the basics of it. So what are the advantages and the key features of the bond? First, you can get your passive income. We make it easy for you, folks. We determine how much passive income do you want, and we can tell you exactly how many bonds you need to buy to get to that level of passive income. If you want to get to 80,000 a year in passive income, you need to buy $1 million worth of bonds. What about if you are looking for diversification? You know, we all know how important diversification is. Folks, we covered it for you. When you buy one of our bonds, you're diversified. We already solved that for you. You don't have to worry about it. We also don't charge our investors any fees. Now, that is something that if you've got, I'm sure you talk to the hedge fund guys and the private equity guys, and one of their favorite things is to kind of go over their fees. They like to explain about the 2 and 20. They like to tell you about the carried interest provision. And I'm not giving those guys a hard time. I'm friends with a lot of those guys. I'm not saying they don't deserve their fees, but I am saying if you purchase an Alamo Mortgage Holdings bond, you're not paying any fees. We generate money by buying at a cheap discount, and then we're able to actually with that earn a profit. So our business doesn't require all of those fees, and that's a benefit to you if you don't like your money wasted on a lot of fees. Interest payment flexibility, we can work with you on that, whether you want semi-annual, annual, we have a lot of options. The illustration of the returns, folks, it's so easy. You put 100,000 in, you're going to get 8,000 a year in interest. If you do that for 1 year, you get 8. Do it for 5 years, you're going to get 40,000 in interest. Do it for 50 years, you're going to get 400,000 in interest. At every time you get the principal back at the end. So it's simple. Why should you invest in the notes? Folks, if you want an above average return, we made this product for you. This product offers an above average return. If you want something that's asset backed, if you like that instead of buying things that don't have any value intrinsically, for example, this is the product. How long term is the note? 3 years, 5 years, up to 50 years. Can you put the note into your self-invested personal pension? Yes, but you still need to get approval from your provider. That's actually a decision that you need to go to your provider for. But if your provider doesn't understand our product or has questions, please, we're happy to talk to them. We know a lot of other SIP providers that also understand our product. What type of investment is it? Corporate income bonds. These are not government bonds, and that's why they pay so much more. Is it a regulated product? No, and that's why we can pay so much more. We haven't had to go through the expensive process of regulation and passing that expensive regulation onto our bondholders. Instead, we can just pay them higher interest. Who can invest? Well, the requirements are if you're over the age of 18, you could be a trust, you could be a company, you could be a business, you could be a charity. Come one, come all. We'd love to work with everyone. How's the money protected? We have multiple layers of security, and we can go over that with you in a one-on-one. Can you invest through a company and are joint applications permitted? Yes. So very important. How about the tax? Folks, we make it simple. We don't know your marginal tax rate. We just pay all the money to you. And then you and your accountant can determine what's the correct amount that you need to pay in taxes. Are there any limits on how much you can invest? No, we come one, come all. We welcome you. And we can also work with larger institutional investors that are looking to place larger placements. So and we work with individual investors that want to get on an annual program where maybe they're going to invest 100,000 a year for 5 years, or maybe they're going to invest 50,000 a year for 5 years. We will work with you. Can you get access to the money early? Folks, this is not like day trading where you can just, oh my God, a newspaper story came out, I better sell at a loss. I'm so smart as a day trader. Those guys just lose money with all of that moving things around. And the ones that chase that 20% rate of return, even if they pull it off, and what are you going to do after you make your 20% rate of return and that money comes back to you in 3 months on some real estate deal? Well, it's basically sitting in the bank waiting for you to find another deal. And you may not find another deal that year that pays 20%. So it's better to just get it placed long-term and then go back to your core business. We will make the money work for you. How can you invest? It's simple. Just reach out to us. Just go to alamomortgageholdings.co.uk. fill out the contact form, or you can call me. I have a US number, +1 and then 817-203-4160. And that is basically how it works, folks. I want to thank everyone for coming today. I'm going to go ahead and stop the recording, and then I'll open it up to any questions that you may have.